sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be elaborating on some analysis that revolves around the month of September in terms of Bitcoin's overall price history. But first thing I need to do here is define each of these vertical lines. The yellow one here at the far left of the screen is going to line up with January 2009, the very beginning Bitcoin when it launched. The white lines are of this, each of these lines except for the first one, the yellow one, are overlaid upon the month of September. The white ones are 8 bullish Septembers, the black ones are 5 bearish Septembers. The blue ones are of the 8, but I made them blue and gave them those lightning bolts down at the bottom of the screen to differentiate them from the white ones because they are correlative to the 4 macro yellow triangles that we see here on price. When it comes to the triangles, the first triangle and the third triangle are one and the same in the sense of when it comes to my phase cycle theory, to quickly just demonstrate that. But the first two cards at the beginning of this video will have me more clearly and elaborately going over my phase cycle system, but I will quickly touch on it right here. We see this first W leading into the breakout of this macro triangle. We then see this lightning bolt pattern right here up to the high of 2013. We then have this slanted downside bear market, and then it basically ultimately culminates in some sort of valley-like formation. Ultimately, what is seen here is something like this. We see a W come down, make an ABCD type pattern, and then we have something along those lines leading up to the next high. So that is phase 1 and 2 of my cycle. Phase 1 is this area right here, when we see that W into the lightning bolt, and then phase 2 is just this valley formation right here. So far, like I said, first and third triangle are the same. What I got done drawing over from 2011 of June to December 2017, that's cycle 2. First cycle was from the beginning of this chart up to the high in 2011, where these first cycle I mentioned began. So beginning at this third cycle right here, we see our W right here leading into the breakout of the same triangle. You can also see that it happened end of August leading into September of 2020. It's the exact same thing that happened back here leading into August of 2012, end of August into September. Then we lead into the first bullish leg of the ABCD pattern that I mentioned, and that lightning bolt is going to be synonymous with this area back here, back in 2013 of April. We also topped out 64,000 March, April of 2021 as well. We're seeing similar months there. Then we've gone down in this bear market. We reached our, what right now is an assumed low, and then we should be heading up towards, according to my phase cycle theory, which I'll elaborate on more later, up towards around, no higher than around 240,000 sometime around the halving of next year. So we are about halfway through cycle 3. We've seen most of the W like we did back here. We've come up to this first peak. We've had our bear market, and now we're basically right here in this area, roughly going back to September of 2013 when you compare those two synonymous phases, those phase 1s of the cycles. As I've been saying, clearly these two periods right here that are synonymous to each other don't look anything alike, but they are different because each cycle Bitcoin is in is decayed. It takes longer to, the duration of each of these patterns, for example, the W, the lightning bolt, or the ABCD, this valley type pattern right here, takes longer to form. So that's why we've seen a drastic increase in the bear market. Like going back to April, May 2013, leading in August, September 2013, it was just looked like a minor retracement, but now it looks like a full-on bear market because it's decayed so much. Outside of that, the second triangle and the fourth triangle are synonymous in the sense that they have seen the same price harmonics. It's not the same, obviously it's not the same points in the cycles and the phases, but when it comes to the price harmonics, they formed the exact same. We can see right here on this, which is going back to 2014, 2015, we see an initial downside, upside. We have our first M right here, then we see an M for the bottom range right here. Bull market began. So we see again, first initial downside, first M, second M winds up with, for this time it was a horizontal bear market bottom range. But if we take a look at this one right here, the fourth triangle, one is whenever was the second triangle, you see the same thing here. It looks a little different, but it's still essentially the same. Fundamentally, at the end of the day, we see initial downside, and then see our first M right here, and then we see a second M right here. The second M is it's a lot more apparent on the lower time frame charts, but still we see the same thing happening here. Instead of seeing that, like last time it was a horizontal, it was a flat bear market range, we saw a decreasing bear market range leading into the end of this triangle, and we finally broke out above it. On top of that, we can see, like I said, these, so the first blue line and the third blue line line up, and you can see that this second blue line right here happened a period of time after the breakout of the macro triangle, like we are also doing currently. Again, first and third are going to be similar. They're going to have a conclusion drawn between them, like I just got done explaining, and the second and fourth one as well. If you take in this text box 13 September total, which we can count 8 bullish, 5 bearish, the bullish ratio is actually, it approximates 1/5. It's the golden ratio, more commonly known as 0.618, and then the bearish one is the flip side of that. Like if you think about the golden ratio as two sides of the same coin, because 0.618, 0.382, when you add those up, it equals 1. The bearish approximates 0.382, or approximately 1/5 squared. Generally, especially if you've been within crypto for a number of years at this point, the last 4 months of like September, November, October, December, those months are typically good months when it comes to, clearly, as I've noted, lining up with shortly into the bull run, really marking the point where things seem to go full throttle. But they also a lot of times will line up with tops as well. I mean, if we go back to 2017, we can see right here, September 2017 leading into December 2017 was the final bullish thrust we saw in the 2016-2017 bull market. But for this monthly chart right here, we can see that this is just further elaborating on what I've already gone over. We see the same triangles here. We see these black vertical ranges are the September to December. These points where we see a coincidence between these 4 months and the breaking out of these macro patterns. I also have the halvings on here as well. This brings me to again, what I've been saying a lot recently. I don't think the upcoming halving is going to be a bullish one, because, and by that, obviously, each of these first 3 have been bullish in the sense that they lined up with shortly into the bull run, marking points where things really started to go to the upside. And I don't think that trend is going to be held because of the fact that Bitcoin is decaying. Like I've been saying recently, the halving is happening every single 4 years. That's something static on top of something that's dynamic. At some point, the trend that you're seeing, as we've been seeing so far, at some point it's going to have to start to differ because of the fact that something static is happening over something that's changing. It's dynamic, it's decaying, like the actual price chart is, as I mentioned on the prior chart. So far, looking at these 2 websites right here, we can see that this one website is predicting April 17th, down to the day April 17th for the next halving. This website's saying right here, just generally April. If we go down here, we see it has a range from March, April to May. I've been saying that recently as well, not really showing any of the websites that are saying it. But when you factor in the lagging effect, as I've been going over in some of my recent videos, a weekly time indicator, and the fact that we saw this 32 bars leading up from, for example, I can just go ahead and put it back on here. If we look at from March of 2020, when we closed its lowest, we go out a total of 8 bars. If we do the same thing for our most recent at 15.4 thousand, when we close the candle low, we go out 8 bars. We line up. So far, everything is following in suit, but the fact that this month has ended up going towards the downside, and also if I were to do this on the weekly, like I mentioned in one of my past videos, when we are seeing some lag behind it. According to the phase cycle theory, we're going to see a move like March of 2022, 64,000, a quick, as I have painted on here, run towards the upside. And I believe it is going to, because of this lag effect, it actually is putting it right in the month of April. In general, just lining up within that 3-month range of March, April to May, which again, I mean, the final thing I could add on top of this, which I mean, I just went over it in the video yesterday, but again, if we take a look here at the Fibonacci retracement with respect to these cycles, these phases, these triangles, you can see our top range is 2.186 to 2.362, this green range right here. If I do that same thing on the next triangle, we can actually wait. We do it right here. We can see that the same thing happens again for 2017, 2.186 to 2.362. If I do it for this triangle right here, we can see that we have yet to meet this with respect to the inherency, the way to the doing it from for the first W right here. Like I said, this area right here, so this highlight is synonymous to this highlight right here, and then this highlight will be synonymous to this highlight right here. So we've yet to meet that criteria yet when it comes to this overall, the fundamental structure, at least that I see within Bitcoin's price, pushing it up to around 240,000, like I said, around 180,000, 240,000, pushing most likely sometime first half of next year. But just to kind of tie everything in together, I mean, I'm kind of harping on this because I've gone over this a lot in my recent videos, but we're either going to see something like this. Bullish support, bottom of the barrel is 20,000, 33,000 is the main above level to break to really solidify seeing an actual, like really like an actual parabolic bull run as opposed to what we've been seeing so far. But again, at the end of the day, I don't know what's going to happen. Nobody knows what's going to happen. None of this is financial advice. And for all intents and purposes, we could go down to 20,000. We could, you know, go sideways or a little bit down or a little bit upwards, like any of these patterns leading into the halving. And I'm wrong. And the halving actually is going to be like the last three, and it's going to be bullish. And then we'll top out sometime either first half or second half of 2025. But here on this daily chart, I may as well go ahead and update this. If I zoom in here on this channel that I went over last time I went over this chart, we can see here that, like I said, we wicked down to the 0.618 from 31.8 down to 15.4 thousand, pretty much right down to the dot. At this point, I'm leaning to staying. We might continue to go down a little bit, obviously leading into the end of this month, and then when September begins, like I was going over in the macro view, so when September begins, things will really start to, we may go down for like the first week or two of September, that's totally possible, but things will really then start to pick up, let's just say around second half of September, first half of October. But I mean, we could trade, I mean, beginning of October lines up, first half of October is right around in this area right here. So I mean, we could totally, for all intents and purposes, do something like this and fulfill this massive wick more. A lot of the times when you see really big wicks like this early on in a drop, sometimes it will continue to trade down and really fulfill that wick more with actually closing candles within that wick. Because I mean, this would be a great spot to come down to. It would still essentially respect 25,000. And not go down to 22, 23, or even 20,000. 25,000 is the main area to look out for right now, as I've been saying, which this goes down to, like I said, 24.1 thousand approximately. So, I mean, I think as long as we hold that, even if it pushes into the first, like, half of October, we could still quite likely see this blue pattern right here take way where we top out within the 3-month range that the halving is likely to occur next year. But that was all that I wanted to go over in this video. Hopefully you enjoyed. Hopefully you learned something from this, as that is really what the meaning of this channel is supposed to be. Like I said, none of this is financial advice. But all of that being said, I hope you all have a blessed day.
Ooh, I'm regretting now, won't I see you forever start to